Hello and welcome to another update video about Polygon MATIC. So yeah, MATIC has come down very deep. It hovers below resistance again, here the 79-cent level. Let's talk about where we are on this chart. First of all, we've been exploring the idea here of a diagonal structure to the upside. So far, we haven't had any confirmation that a breakdown would occur, and price continued to follow this wedge. And to be honest, against odds, broke to the upside. That was surely related in a way to the XRP news. Normally, I mean, it's all probabilities, right? But normally you would expect these wedges to break to the downside. In this case, didn't. But all the profits have been lost already again, okay? So it's not really bullish anymore. But the situation is extremely difficult here on this chart. We have had a very corrective structure of the 10th of June lows. Out of our trend reversal area, a bit of a rally, but only a corrective rally. Price then obviously broke out. That was to a degree related, or pretty much related, to the XRP news. But again, all of that profit has been lost again. Important, very important breakout point is at 95 cents. I said in the last few videos that I've seen in 2021 various coins break out of these inverse head and shoulder structures to the upside and start a new rally. Now we're not there yet, okay? So we need to get to the neckline here, maybe even put in an inverse head and shoulders pattern. That could certainly play out like that. From a wave count point of view, we need to be very flexible here on the MATIC chart. I'm not happy with the count we have because it is at best a diagonal. Okay, at worst, it's something that's failing. I'm worried about failing here. I mean, this could easily break down again, especially with the 79-cent level, which was quite important support, previous resistance, now support. That level has been lost again. So MATIC was unable to retest it and flip it successfully for support, and now we're consolidating below that level. That to me looks a little bit like failure. I think it's a bit too early to confirm it, but it looks a bit like failure. And already here, the support area was orange anyway, so higher risk. And the wave 4, I mean, I cannot, it's not a reliable wave 4 anymore. It's far too deep to be reliable. And it looks quite impulsive to the downside. Actually, let me just change the density of the background. We see the waves better, but yeah, this seems like a 5-wave move down. So I am not changing the count yet because there isn't really much clarity here in terms of what it could be. But certainly what it still could be, that's how we had it before. I mean, in terms of micro count, it's not so clear. But what it could be is still a wave 4 with one more wave 5 to come. So that's what I had before on the chart. I did take it off because of the rally. But obviously with the latest price action, it looks like a failure. I still keep options open to the upside because we haven't made any lower lows yet and no lower highs. But if that continues like that, I just want to tell you, this looks like a failure. We even broke below the ascending trend line briefly. So it doesn't seem to be respecting support very well at the moment, very weak. Even though today it's up slightly, but yesterday it touched the 78.6 retracement. And it could very well be that we do in the end come down to that 48-cent level. Now that level or that risk obviously was never gone and is not gone because we haven't got a solid 5-wave structure to the upside. Really only with the solid 5-wave move up in a wave 1 and then a 3-wave pullback, we have clarity that a more lasting low has been made. This structure makes it quite difficult. So we need to be flexible. That's exactly what that structure tells us. So what we can do, we can use the trend lines. So price is sort of respecting it still, this trend line here. Below that, we've got the other ascending trend line here. And yeah, below that level, I mean, we get back into the trend reversal area and support is still relevant at 61 cents. We reacted a few times, and then 48 cents is basically the, yeah, you could say long-term bullish support level. But at the moment, what I'm doing, I'm watching for clearer signals that we will continue to go up. At the moment, I don't have any, but I'm watching it very closely. I'm not prepared to change it to bearish yet without clear confirmation. But as soon as more bearish information comes in, I will bring that detailed count back onto the chart. And yeah, we just need to be flexible with these diagonal structures because they can develop all sorts of different structures. So for now, I don't have a breakdown yet. It's just that it's always concerning when that pullback here is so deep. Now, again, next breakout point as well as resistance is the 94.95 cent level. Price needs to get there to get a much bigger rally into the $1.50, $2 regions. Until then, we need to be flexible, and there is still downside pressure below 94 cents, but short-term price, of course, has a chance to move up. It's just that price action isn't very convincing. It's too much overlapping price action. Yeah, that's my update about MATIC. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.